Well, good afternoon, everybody, or good early evening, depending where you're joining me from. This is Ron Wheeler, and it's my pleasure to welcome you to our class night, How to Generate 3% per Month with One Option Trade. Let's do this. I did open up the room a little bit early, and I just want to make sure that everything is working okay. So here's what I'm going to do. I am going to advance the slide, and it should say on the slide, on air. If you can see my slide, it says on air. If you can hear my voice and all that stuff is working, just give me a quick shout out into the question box or the chat window, whatever it says on your side. That's the way I know that everything is working awesome. All right, looks good. I see Carson and Scott and Charles and William and Tim and Richard and Raymond and Paresh and Michael, Emmanuel, Lone, Lee, Kevin, two Kevins, Kevin W and Kevin M. See Joseph in there, John. All right, good deal. Looks like everything is working very well. That's what I like to hear. And then, secondly, just kind of curious while we're waiting for the official class to start, what time is it by you? I'm actually in Ohio. It's 4:58, so a couple minutes before 5 o'clock, our official start time. Just kind of wondering where all of you are joining me from. Always get a good idea. Oh, I'm also in Ohio. Charles, you're in Cincinnati. I'm in Akron. Well, Akron area. Carson, 5. Presh, you're in California. Florida, Valens, I see. All right, cool. I see a lot of people at the 5 o'clock time, like I am. Only one person in Ohio with me, but that's okay. Florida, Georgia, Jim, Arizona. Awesome. I don't see anybody from like Europe yet. Normally we get a Europe person in there at some point, but Mexico, Tim, awesome. Well, at least there's our first. I haven't even seen a Canada yet. Oh, Canada, right there, 2 p.m. Or California, sorry. So, yeah. Oh, Toronto, Carson, perfect. See, I knew there was a Canadian out there somewhere. All right. And just kind of curious, what do you do for a living? You guys retired? You working? Just trying to get a feel for who is in our class tonight with us. Always gives me an idea of how I can relate to some of the examples. Eric, oh, I see you're in Kansas. A lot of retired. Charles Valens, you're retired as well. Still working, I see. IT specialist, Carson. I actually have a degree in IT. I was an IT specialist for the first part of my career, which lasted about 2 years. And then I took an IT job with a company that made trading algorithms and software. So I kind of merged into trading. Harvey Willard also retired. All right, cool. So it looks like we got almost retired Paresh, cybersecurity. Nice. So it looks like a lot of you are retired or near retirement. I love it. It's funny. My wife got her email the other day for her 30th high school reunion. And I'm like, that's what I've been telling you. I'm like, I hit mine a couple years ago. I'm like, I'm telling you now, we're closer to retirement than we were from graduating high school. She's having a hard time with that, but, it happens. All right. Well, let's do this. Let's officially kick this off. And I want to welcome all of you to today's webinar, How to Generate 3% per month with one option trade per week. And I'm super excited you're here because this webinar is going to teach you my bread and butter trade that helps generate income. And it's a trade that I place multiple times a week personally. And I do this live with my coaching students. So I'm going to show you today how you can turn 15 minutes a day into consistent income, no matter what the market does. So stay with me because what you're going to learn today could completely transform your financial future, just like it has for me and hundreds of my students. But I do want to ask, I kind of want to ask a question before we get started. And also, the session's live, remember. Today is, the 21st of January. It's 5 p.m. So interact with me in the chat how you guys have been doing. But the question I want to answer for you, ask you first is this. In the chat window, give me a number, a 1, 2, 3, or a 4. How would you describe your current income system in the stock market? Type a 1 if it's non-existent. In other words, you don't have a way to generate consistent income. Give me a 2 if it's just trickling in, but it's nowhere near enough. Type 3 if it's there, but it's inconsistent and you need more. Type a 4 if it's a steady flow, possibly multiple income streams. You can turn on or off when needed, and that provide plenty of extra money. So type a 1, 2, 3, or 4 in the chat. Kind of let me know where you are in the whole income concept here. All right. I see. Feel like I'm on Romper Room. A lot of you guys will probably remember that. Neil, number 1, 2, 1, 3, 3, 2.5, 3, 3, 3, 3, 2, 2, 2, and 3, 1, 3. And then Mylan, you asked, where's the chat window? You're on it, my man. So You're good. Four. All right, cool. So listen, if you're a one, two, or three, you're in the right spot today. There's no doubt about that. Even if you are a four, I bet you're going to learn how to increase your existing income flow and do it with less risk and less time expended. Now, in this webinar, you're going to begin making a paycheck averaging 3% or more. You're going to learn how to do that, keeping in mind you can do it regardless of market direction. You can do it with little to no prior experience. You can do it safer than buying and selling stocks, and it's something that you can implement quickly. Now, one of my recent students sent me this email. He said, "Hey, Ron, just want to send a quick email to thank you and your team for the SPX Paycheck course in September. I've been using this method, tracking my performance, and I thought you'd like to see the results. I entered my first 35 Delta trade on September 21st, 23, with only 5,000 in my margin account. Now, less than 3 months later, I'm already up 24.9%. Thanks again. I'll be teaching this method to my retired in-laws to help them grow their account in retirement." Now, I love hearing that. And there's a lesson here for you. You don't have to dedicate 100 grand to this. You can start small while you learn and practice because it ultimately builds up very quickly. For example, if you started with 5 grand and you averaged 3% per month, compounded over 15 years puts you over $1 million. Now, if you started with 25,000, you'd be near a million after 10 years. You're looking at serious money, serious growth. Now, clearly, if you have more than 5 or 25, you're going to get there much, much faster. Now, some of my clients were kind enough to share their photo and their results today, and I'm going to share them with you, and we're going to talk about them. Now, these are real people just like you. So, as I teach you the system today and share their stories, I want you to pay attention because you might find yourself in a very similar position now as they were when they started. Now, here's how we laid out today's webinar. The first part of the webinar, I'm going to show you the strategic shift that's necessary to generate consistent income. After that, I'm going to show you the 3 big mistakes you need to avoid. In fact, by knowing what the mistakes are and that thousands of other investors will inevitably make them, you'll be in prime position to profit. We're going to talk about things like strike prices and expiration dates and how to pick them correctly. Then in the third section, I'll show you how to set up your income trades with very low risk. Do me a favor, type a yes in the chat if you've been told that selling options was risky. Just curious. All right. Yeah, I see a couple of yeses in there. Well, I'm going to show you how to do it the right way. So there's even lower risk than buying a stock. And then I'm going to lay out the 6-step paycheck system we follow here at VectorVest to generate income. Now, this is different than what others will teach you out there. So I'm going to walk you through it today. And then throughout the session, I'll mix in some case studies of our clients who are doing this. And like I said, you might find that one of them is just like you. Now, I feel that there's a ton of great information in today's webinar, so it would benefit you to stay to the end. And if you do, I put together a little checklist to help you plan out your trade. It's a PDF that I will put right in the handout section of GoToWebinar. So just remind me when we get to the Q&A section at the end, because a lot of times after an hour, I forget. Now, also, I love to interact during the webinar because we get so much more out of it when we kind of work together. So there's going to be several times throughout the webinar, just like we've already done, where I'm going to ask questions. So let's interact back and forth. And remember, there's only so much I can cover in an hour. So throughout the session, I'll be mentioning some of the things that you can do after the webinar if you want to continue your education and start implementing this even sooner. Now, we'll talk more about that at the end, but I guarantee this is going to be 1 hour of packed information. So if you're good with that and you're ready to go, do me a favor. Just give me a quick shout out in the chat window. Just say yes, and then we can get started. All right, let's do it. Now, why is this such an important topic? Well, without an income system, financial stress is your constant companion. And that creates a number of problems. You may feel stuck working longer than planned, or you're stressed about worrying about running out of money. You might be depleting your savings faster than you can fill it, especially with how much prices have gone up so much. If things don't improve, you may fear you'll continue to have those losses that draw down your account. You're going to get behind on your goals, maybe even question your ability as an investor. You might even fear you'll have to give up on investing and go back to work. Worst case scenario, you'll run out of money during retirement. Now, with the options paycheck system to help you generate income, you can break free. It's designed to help you generate income safely and consistently in less than 15 minutes a day. Now, I believe this is one of the most important parts of the presentation. So pay attention, write this down even. In order to be financially free, all you need to do is learn to generate enough income from your investments to cover your expenses and lifestyle needs. So let me say that again. In order to become financially free, you need to learn how to generate enough income from your investments to cover your expenses and lifestyle needs. So whether you're still working or you're retired, the ability to generate income from your investments is one of the most empowering skill sets you can have. Because when you have the ability to generate income from your investments, your life will change. If you're still working, you can increase your earnings capacity. It's like having a second job. If you're retired, you can have a consistent source of income as if you quit your job, but they kept paying you. It's like a tap you can turn on whenever you want. That's going to allow you to do the things you want to do now and when you retire. So when you've got a system to help you generate income, it can help you retire younger. Now, as I said, I think this is one of the most important points of the presentation. I'm going to say it again. When the income from your investments exceeds your living expenses, you become financially free. For example, Brian is a client of ours who's a great example of how easy you can become proficient at drawing an income from the market, even if you don't want to invest a lot to begin with. Now, Brian had some health problems and needed a way to supplement his income. By using the options paycheck system, he was able to generate $23,000 in profit, starting with just 5 grand. He achieved 100% winning trades in 10 months, 31 of 31 winning trades. Our most basic system, we'll talk about that today. And the key point here is it's not beginner's luck. It's the result of following the system. It's the system that helped Brian get 100% winning trades and create that $23,000 in profit starting with just 6 grand in 10 months. Now, the first thing you need to know to generate income with options, it's a bit of a strategic mindset shift. You're either going to continue being the gambler where you lose more than you win, or you're going to become an option seller and win more than you lose. Being an option seller is the way that you make consistent income, and it allows you to win even when you're wrong. Now, the reason you want to be the casino or the house is that, well, number one, the house always wins. And number two, the house always wins because they control and stack probability in their favor. Our options paycheck system is built around you stacking the odds massively in your favor. So make a note of this. In order to control your returns and results, you need to know how to stack probability in your favor. And the obvious question is, well, how do we do it? Well, the first step is that shift from being the buyer of options to being the seller. So let me explain. Bruce is a great example of that shift from gambling on stocks to being the casino and controlling and stacking probability in his favor. He said prior to working with us, he'd mainly taken stock tips from brokers. Now, Bruce focused on our SPX income system, remember that, which is our basic trading system. As he says, he's not the most technical person in the world. But in the time he's been working with us, he's grown his trading account from 100 to 497,000 in 3.5 years. He is achieving a 74% win percentage simply by following the rules of the options paycheck system. And the whole system takes him around 15 minutes a day. So let me show you how this works. Here's an example of a typical trade you've been taught to make. You find a stock that you like, you think it's going to go up, so you either buy shares of it or you buy a call. Now, why do you buy a call option? Well, mainly because when you started learning options, it's what you were taught to do, right? If you think a stock goes up, you buy a call. If the stock goes up, the price of your call should go up. You profit. But what ends up happening a lot of times? Well, either the stock doesn't go up, or worse, it doesn't go up enough. And the call that you bought ends up expiring worthless. Has it ever happened to you? Well, what's the problem that's causing you to lose? Most people feel the problem is, well, maybe they picked the wrong stock. Maybe it was the wrong strike price, or maybe it was the wrong expiration date. But let's talk about the real problem. If you've been losing money or had more losers than winners with other systems, it's not necessarily your fault. It's because most of the systems on the planet teach you to be on the wrong side of the trade. You're taught to buy an option. But as a buyer, The probabilities are not on your side. And for most people, they end up buying and losing and buying and losing and buying and losing. Our options paycheck system teaches you a new way of thinking. You need to be a seller and not a buyer. This is how you get ahead of everyone else. This is how you put probability on your side. This is how you win even if you're wrong. So let's take a closer look at selling options. As a buyer, a typical trade is going to give you a 50-50 chance to be a winner. Because when you buy, the only way you make money is if the stock moves in your direction. So instead of having this buyer's mentality, you're going to have a seller's mentality. Instead of hoping a stock goes up, as a seller, you're going to strategically set up your trade using probability. Now, the probability will tell you where the stock is not likely to go. So instead of just needing the stock to go in your direction, you can pick a price which basically says, hey, as long as the stock doesn't go down to here, I can make money. So think about that. You pick a price below where the stock is. You think the stock is going to go up. So you pick a price below the stock. And as long as the stock stays above it, you make money. If the stock goes up, you make money. If the stock goes sideways, you make money. The stock can even come down a little and you will still make money. So right from the very beginning, that probability is in your favor. And you can increase that probability even more. You simply choose a lower price, which gives you a bigger area where you can be right. We do a lot of the trades that start off with a 70% chance of success. And this is something you can only do as an option seller. As the seller, you're putting the probability of success in your favor, and this is why we call this an income trade. An income trade, very simply put, it's a trade where you can make money even if you are wrong on direction. Now, you remember talking about Bruce? Remember 100 grand, 397? He continues to trade with us every week. In fact, I talked to him today. He posted in our private group and said, another day of trading on the beach. Got my eyes on AMC and a cold beer. Life's good. Thank you, VectorVest and Ron, for giving us the tools to do what we do from anywhere. That is a great picture of financial freedom. Now, Mike was another person of ours, a client of ours, who said he dabbled with options but lost on each of his trades. Have you ever been there? Can you imagine how frustrating that is to lose on each of your trades? Well, eventually, he just gave it up. He tried to learn more about options, but he said he never felt comfortable he knew what he was doing. He said he didn't have any set criteria. So Mike and I worked together. I taught him the options paycheck system of being an option seller, and he said he became an income machine. After he learned and implemented the system, he went out and said he had 17 out of 19 winning trades, the profit of over $12,000 in 4 months. So the key lesson is going from buyer or the gambler to seller or the house. That's what turned his situation around. He was even so proud of his success, he sent me a spreadsheet of his trades. And here's his results. I want you to notice the number of winners, that's the profit column, to losers. It's typical. Now, notice the length of trades. You got a 7, you got a 5, a 2, a 7, a 7, a 10, a 7, a 10. He's making about $1,000 every 7 to 10 days. That's also typical. The typical trade that we do is 7 to 10 days long. This is not something we do for day trade or anything crazy like that. It's something that you can do, like I said, in 15 minutes a day. Now, if you're like Mike and a lot of our students, you can begin trading the SPX, which is the index that tracks the S&P. That one trade alone has averaged about 2.3% per month over the last decade. You're not just learning how to trade options here. You're creating a future where your income grows without adding hours to your day. Imagine turning that financial stress into confidence, knowing your money's working harder than ever, even when you're not. Now, you're not looking for one big home run trade to become a millionaire overnight. You're growing your account steadily each year. And that's the key takeaway. Home runs look good, but singles win the games. These singles are what will enable you to never run out of money and to be able to do the things that you want to do. Now, you've seen by flipping from the buyer to the seller how you stack the odds significantly in your favor. Now what we're going to do is we're going to stack the odds even further by understanding and capitalizing on the 3 most common buyers or gamblers' mistakes. Mistake number 1 is that option buyers choose unrealistic strikes. They choose strikes that are so far away from the current price of the stock has little to no chance of hitting it. So here's a stock. It's $217 right now. A mistake a lot of option buyers make is they'll buy a call with a price way up here at like 230. The stock will have to go from 217 to 230 for you to make any significant amount of money. Why do people buy options up here when the stock has a very low probability of hitting it? Well, they do it because they're cheap, right? Most buyers treat options like lottery tickets, and most of the time they end up lose. They're like gamblers. Now, since there's always going to be buyers out there who are buying these options, you may as well be the one who sells it to them. You're selling an option that has a low probability of getting hit. And since it has a low probability of getting hit, that means you have a high probability of winning. And the same ultimately goes for puts. There's people who buy puts way below the market, maybe as a lottery ticket or maybe cheap insurance for their stocks. Again, it really doesn't matter why they're buying the puts. The fact is, there's always buyers out there who will buy these options. And since there's always going to be the buyers out there who are buying these options, you may as well be the one who sells it to them. Selling these options is going to give you a 60 to 90% probability of success right from the very start of the trade. Now, the second mistake buyers make is they choose expiration dates that are simply too close to the current date. It's like when you go to the grocery store and you see a piece of steak on the discount rack. It's cheap, but it's going to be worthless very soon. And the same is true for options. Here, you see what happens to the price of an option in relation to the number of days until expiration. Now, in the upper left-hand corner, this signifies an option that's 180 days from expiration. So as the option gets closer to expiration, you can see the time value of that option getting, lower and lower. It's running out of time value. Now, right about here, something kind of interesting happens. After about 135 days, the option has lost about 50% of its time value. But as you can see in the last 45 days, it loses the rest. So in this last 45 days, you can see how the options lose their value exponentially. Okay? Now, a lot of buyers buy their options with less than 45 days until expiration. Well, why do they buy the options if there's so little time left? Well, think of the value, right? They're expensive out here and they're much cheaper in here, right? Because all the value's gone. It's again like buying a lottery ticket. But when you do this, you're stacking the probability against you. So instead of buying in that area, we are going to sell in that area. Now, keep this in your mind. To be more specific, our paycheck system uses an expiration that is 21 to 45 days away. That is the sweet spot here. Now, to kind of show you in another way, this is a graph of Home Depot. Now, most buyers, again, they're going to go out there, 30 days, 40 days, and they're going to buy a call because they think the stock's going to go up. But that expiration is too close. Notice how the value of the option just drops off because it's getting closer to expiration. This is bad for the option buyer because even if the stock goes up, that value is declining. It's eating into your profits. Again, this is bad for the option buyer, but now you're going to be the option seller. That time decay is going to work in your favor, right? You're going to sell something and it's going to lose value, and then you're going to close it later for a much lower price. Remember, there's always going to be people buying options that have an expiration date too close. You may as well be the one who sells it to them. Let them be the gambler. You be the casino. You always win in the end. Now, the third mistake buyers make is they simply pay too much. They buy what's called an overpriced option. So let me show you what I'm talking about here. Here's two stocks. Now, if you can't see the small numbers, I get it. Both stocks are basically the same price, right around 76 bucks. But even though the two stocks have the same stock price, they have very different option prices. The one on the left is $910. So to buy a call, it's going to cost you 910 bucks on the left. On the right, it's going to cost you $180. Same stock price, I should say, same expiration on the option, same strike price. Why are they so different? Well, the option on the left has high implied volatility. Buyers who buy options with that high implied volatility are paying too much. Well, what's the big deal? What happens when a buyer buys an option that's overpriced like the one on the left? Both stocks go up $8 a share. They go from 76 to 84. Obviously, if you'd have bought 100 shares of each, you'd make money. But let's see what happens to the value of the options. Over on the left, even though the stock went up, you got direction right. That option lost money. You got direction right and you still lost money. Where over on the right, that was like a 400% return. Why did the option buyer on the left lose money? Because they paid too much premium. They didn't pay attention to volatility. When options are very expensive, the stock has to move even more for you to be profitable. Now, we're going to use that to our advantage. Instead of buying these expensive, overpriced options, you're going to be the seller. Now, I want you to think about that for a moment. As an option seller, you can be wrong on direction and still make money. You're stacking probability on your side even more. Now, Bob has one of the most interesting stories I've seen. He said prior to working with us, he was making a bunch of the mistakes we talk about here, and it cost him dearly. In fact, he ended up either broke or bankrupt 3 times, and in his own words, came close to living under a bridge. The options paycheck system helped him turn his situation around in as little as 4 months. He learned to turn those mistake liabilities into strategies to control and stack probability in his favor. He said in 4 months, Bob grew his account by 71%, and he said he achieved a 79% winning trade percentage. Remember, if you want to learn to control your results and your returns, you've got to know how to control and stack probability in your favor. So let me ask you guys, in the chat when I want you to share with me, have you ever made any of those buyer's mistakes? I'm curious. Go ahead and type in the chat if you've made those mistakes before. All right, I see lots of yeses in there. Lots of yeses. Of course, Scott, Matthew, Tony, Paresh, Milan, Manuel. Listen, I've made them too. I've been trading now for 29 years. I hated options when I first started trading because of these kind of mistakes. Now I'm a full-time options trader, go figure. But once you overcome those mistakes, it's good. We've all made them. It's not our fault. We were simply just taught a broken system. Now, hopefully at this point, you're kind of starting to see the benefits of being an option seller, and you know you're going to avoid and capitalize on those common mistakes that buyers make. So let's look at how to trade with very little risk, because my experience shows when a lot of people hear the word options, and especially the term selling options, they immediately think it's risky. However, the options paycheck system uses a low risk strategy for selling options, and this is why it's a core strategy we teach all our retirees. Now, why is reducing risk so important? Because most people who don't use the options paycheck system aren't preserving their capital. They have one bad trade wipe out the gains from a bunch of winners. And when you suffer those large losses, it's so hard, it takes a long time to recover. But when you do it right with the right system in place, you're going to have a built-in protection plan. You're going to take care of risk management before you even open the trade. When you can select stocks confidently and you set up your trades in a way that reduce risk, this is what allows you to preserve and grow your capital. Now, like I said earlier, home runs look good, but singles win the games. And one of the most common questions I get asked is, can I trade options from my IRA? Now, a client of ours, John, in his words, grew his IRA over 112% in 1 year using the options paycheck system. John had tried and struggled with trading for some time before working with us. He learned to follow the system and turned his inconsistent results into predictable monthly income. In 12 months, he enjoyed 85% winning trades and more than doubled the size of his IRA. And again, in his words, spending no more than 15 minutes per day on his trading. Now, the options paycheck system makes sure you reduce your risk before you even open the trade. First, We choose stocks that are low risk. We have a very specific criteria, but in general, if we're bullish, we start by focusing on good stocks that are already rising in price. Very similar to the graph you see here. Then, instead of selling options naked, we're going to sell with protection. So let me show you how to do this. Traditional option selling systems leave you with all of this risk down here. The options paycheck system shrinks your risk to just this. So let's look at how this works. This is a graph of a typical stock we'd be bullish on. It's a great looking graph, right? So it's understandable you want to be bullish. Moving left to right, the lows are getting higher, all that stuff. Now, traditionally, you would go out, if you like the stock, you'd buy the stock right here at the current price. Maybe you're going to buy an option. So you're going to buy a call and use the current price as a basis for where you pick your strike price. But, and this is an important but, you are not the buyer anymore. You're going to be the seller. So here's what you're going to do. When you are bullish and you think a stock will go up in price, you are going to go underneath the stock price. Stock's at 138. In this example, I choose 135. You are going to go there and you are going to sell a put. When you sell that put, you are going to receive premium. Okay? Remember, you're getting paid. So in this example, you're getting paid $200 for selling that 135 option. If you sold 10 of them, you get paid $2,000. Now that's great, right? However, if the stock drops, you have no downside protection. You can lose a lot of money. One bad trade wipes out a bunch of them, right? What we need to do is we need to use a built-in protection plan. You're going to buy a put a little bit lower as insurance. Now, buying that put reduces your risk to that amount right there. It's very small. Now, that protection plan costs something. To buy it, you're going to use some, but not all of the money you receive from selling the put. So we receive $200 when we sell the put. We're going to, in this case, spend about half of that, and we're going to buy insurance for $100. That's going to leave you with $100 of what we call a net credit to place the trade. You're going to get paid $100. Now, if you did 10 contracts, you would get paid $1,000. That becomes the maximum that you can make on the trade. You can make up to $1,000. How do you make $1,000 on this trade? You make $1,000 if the stock goes up. You make $1,000 if the stock goes sideways. The stock can even come down a little bit and you still make money. If it goes down too much, just like any other trade, we would exit it and take a small proportional loss. Okay? So that's the theory. Let's put this to work. I want to set up a trade using an example of a trade I did with my clients. That way, hopefully you can have a better understanding of how to set them up. I'm going to show you some numbers, so definitely pay attention here. When the market is bullish, okay, keep this in mind, we're only placing bullish income trades. So like right now, the market is bullish. Even yesterday when it was down 140 points, I actually placed a couple of bullish trades because underneath all that, the market was bullish. And today the market was up like 70 points, right? So bullish behavior in the market, bullish stock trades. And here's another tip when it comes to the options. We are going to pick a strike with at least a 60% probability of winning. Now, here's a stock that I traded, DRI, Darden Restaurants. This, again, is in a nice uptrend, right? May 12th, 25, it was still in the uptrend. Let's zoom a little closer. At the time we placed the trade, it was right around $203 a share. Now, ask yourself, where do you think DRI won't drop below prior to expiration? And that's what I labeled in the red line, right? So in the next month, where do you think DRI won't drop below? So I've got three choices for you. Now, here's the cool part, right? You don't just have to throw a dart and pick a number at random. Remember, I said we're going underneath the stock price and we're going to sell a put. Every broker has this probability information. So I go to my broker and I see that I can sell a $200 put, and that gives me a 55% chance of success. If I go down a little bit lower to 195, I can sell that put, and I would get a 64% chance of staying above that till expiration. Or I could go all the way down to 185 and sell that put and get an 80% probability of staying above. Well, based on the tip I gave you, which one would you pick, A, B, or C? Type your answers in the chat box. All right, I see a lot of folks doing A, a couple of folks doing B, a few of you doing C. All right, so let's talk about this. First off, I wouldn't do A. 55% is not enough. I want more probability. Remember that tip? I want at least 60%. So that puts you in the category of B and C. Now, the trouble with C is that too much probability leaves you with a trade that could cause a big loss. It's nice to be 80% right, but not if you're going to make $1,000 when you're right and you're going to lose, 10,000 when you're wrong, or even 5,000 when you're wrong. Think about this, right? You make 8 winning trades out of 10. On those 8 winners, you make 8 grand. But then on the 2 losers, you lose 10. It's not going to work. You're 80% right, but you're still losing money. There is a sweet spot of probability. And for those of you that said B, that's really the sweet spot in that 60% range. This is where we can make 1,000 and risk 1,000. We get probability and we get good risk reward. So 64% is where we want to be in this example. Now, let me break down the trade. This is called a bull put spread. Bull because you're bullish, you think the stock's going to go up. Puts because we're using puts. And spread because we're putting a spread of $5 between those options. So in one transaction, I'm going to sell a 195 put and I'm going to buy a 190 put. Okay? So that's again called a bull put spread. Now, these trades have a built-in protection plan. Your true risk in this case is only $98 a contract. So let's see how this worked out. In about 2 weeks, 10 days, we made $700. How do we make $700? We sell the options, we sell the spread for a certain price, and then once the stock goes either up enough, far enough, we exit the trade for less money and we receive a profit, in this case $700. Now, this happened again in about 2 weeks. We exit the trade, we move on with our life to the next trade. Now, what happens when the market turns bearish? Because, hey, the market's never bullish and bearish, right? It's never just bullish, it's bearish sometimes. That's what I meant. So, when the market is bearish, we do trades like Target. You can see the difference. See how Target's coming down in price further and further, right? It broke below a previous low, and it's going lower. So let's zoom in closer. Now, you're going to win if Target stays below the option price that we selected prior to the expiration date that I've marked in red. Now remember, for those of you that didn't remember, we're doing 21 to 45 days of expiration. Okay, that's where that red line is, between 21 and 45 days. So what I'm going to do now, because I think the stock is going to go down, right? I think it's going to go down. I need to go above the stock and pick a price. So I go to my option broker. The stock is at 130.93. I can pick 135 with a 64% probability. That means I have a 64% chance of staying below 135 until expiration. I can go up to 140 for a 76% probability, or I could sell the 145 for an 85% probability. Now, hopefully, from the last example, I'm going to give you guys a tip. Too much probability is bad. It's not going to be A. Which one of these would you pick? Go ahead and type in the chat. All right. I see lots of A's, lots of B's, lots of, or I'm sorry, not lots of A's. Pardon me. I was on the wrong thing. I was talking about the last one. There we go. I see Paresh, Tony, Dan, Manuel, Kevin, Eric. Everybody is saying C. Carson, you said B. Well, here's the cool part about this. If you said B or C, you're actually right. You could do both of those. It doesn't matter, really, right? Because C gives you the minimum 60% that you're looking for. That's a good one. Now, in this particular trade, I was actually go up to B. Now, why was I able to go up to B in target? Because if you remember we talked about how option premium gets really, really expensive? When option premium gets really, really expensive, okay, guess what? You can add more probability. So you could have done this trade at either B or C and had great probability, and here's the cool part, good risk reward. So in this case, B or C is a good answer. I chose B because that extra premium that gave me a good risk reward. Now this trade is called a bear call spread. Bearish because, well, you're bearish, right? You think the stock's going to go down. Calls because we're using calls. Okay? I'm going to sell a 140 call, and then I'm going to buy a 145 call as insurance. And as long as the stock stays below 140, I can make money. Now, here's the key. I didn't have to hold this trade till expiration. And by the way, we never hold them till expiration. It only took 7 trading days for this stock to go far enough out. Didn't even go down very much for me to be able to lock my profit in. 765 bucks. Now, the one thing you're going to notice from my trading, by the way, is when I do my trades, I price them all to make about $750 when I win. I keep my gains very, very consistent because that way I can control my risk even better. Okay? Now, by the way, if you're wondering, well, how much money in my account would I have to do a trade like that? Well, based on risk, I would tell you about 50 grand. So if you have like 25 grand, no problem. Your 765 would become 380. You know, if you have 10 grand, your trade might be $160 winner. Doesn't matter. These trades scale to your account. Now listen, it's okay if you don't understand all the mechanics right now. We'll get there. Remember, you're not just learning how to trade options. You're going to create a future where your income grows without adding those hours to your day. Now, another client I worked with is Jim. He said prior to working with me, his results were inconsistent and he felt unsatisfied. You ever think that, there's something else out there that's better or you're missing? Do you ever think that way? There's got to be something out there that I'm missing, right? Jim said he wanted a way to supplement what he was doing and would provide more of a regular income with a higher degree of success. Now, after learning the system, he told me he had 21 winners in a row and returned about 76% in 8 months. His average trade lasted about 8 days. Can you imagine how that must feel to go from being inconsistent to where all of your trades are generating income? Now, I want you to think about that. That was Jim. What about you? What would an income system like this allow you to do? Do me a favor. Think of some things. How would adding 3% a month to your trading account help you? What can it help you do? Type in the chat box. Maybe retire earlier, maybe do more vacations. I don't know. You tell me. How would an extra 3% a month affect you? All right, Paresh, more vacations. That sounds good to me. Carson, retirement. Milan, retire earlier. Vacations, retire and enjoy vacations. You guys want to travel a lot, which is great. Me too. Pay off the truck, retire earlier. Exactly. That's what the extra 3% can do. Now, we said before, buying is gambling. Selling is about controlling risk and putting the odds of success in your favor to generate income. The options paycheck system makes sure you have a guaranteed maximum risk. And it all goes back to whether you'd be the gambler or the casino. Because remember, the house is always going to win in the end. Being the option seller is the way you can make consistent income every month, and it allows you to do it more safely with a higher probability of success than simply buying and selling stocks. All right, now let's put this together. I want to show you how you can have a bulletproof system, which you can do in as little as 15 minutes a day. And my students who've implemented this system have told me this is the most important thing they've learned. Why? Because the biggest thing people ask me is, well, how much time is it going to take me? And it's a great question. Here's the challenge of this. There's thousands of stocks out there. You got to be able to find how to pick the right stock, the right strategy. When do you get in? What expiration? What price do you get in? What do you do if it goes against you? When do you get out? And you start thinking about that, and it feels like you're trying to find a needle in a haystack because there's so much information out there, you don't know where or what to look for. You can spend countless hours researching trades or going from guru to guru looking for advice. Without a system, though, you're trading blindly. You're like that mouse running through a maze, bumping into wall after wall. You don't know where to go. It's stressful. It's disheartening. But with the right system, you can identify good trades, get reliable income in as little as 15 minutes a day. Now, listen, if you think you're too busy, remember, time is your most valuable resource. And this system can be just 15 minutes a day or even 15 minutes a week. And it's designed to give you back control of your time and money. Imagine what you could do with that freedom. But to get it, you need a system, and not just any system. A straight line system. You need a really simple way to know when to place your trades, how to find them, how to set them up, and then how to manage them. So let me walk you through the steps of the options paycheck system. Now, step number one is market direction. A lot of traders ignore this and they just go out and start placing trades. You're going to be placing trades that are either bullish or bearish based on the direction of the market. So you obviously have to have a way to know what market direction we're in. Today we looked at an example of each, right? But what we didn't talk about is how do you know if it's bullish or bearish? We have a timing signal built in that we use to tell us the market's direction. That way you're narrowing your focus. You're not looking for stocks always going up and down. We're narrowing our focus and we're adding more probability to the trades. So once we have market direction, we are going to be looking for our stock selection. In our stock selection, we want to look for stocks that are highly likely to move in the same direction as the market. So just trading stocks you're familiar with or listening to gurus on TV, it's not really the best choice. What you want to do is find good stocks already in uptrends when the market's rising, bad stocks that are in downtrends when the market's falling. Now, our options paycheck saves a lot of time in two ways. We look at two main things, fundamentals and price trend. And we've got a couple pre-built searches in VectorVest that we use so you don't have to dig through all the data the institutions throw at you. Now, once you have your list of stocks, you want a way to select the best ones for option trading. Remember earlier we talked about how big of an effect volatility had on an options price? Our options paycheck system focuses on selling options with volatility in the upper end of the range, but we don't stop there, okay? To take even more risk out of the trade, we filter out upcoming earnings events because earnings can drive the stock anywhere. We don't want to have any part of that, okay? And we also want to make sure that expiration date is in the sweet spot. That way, if the stock goes nowhere, it's still going to decay very quickly. Now, you can use your tools from a broker to help. We happen to use a proprietary search tool which finds option candidates in just really a matter of seconds. Now it's time to set the trade up. We're going to set the trade up by picking the highest probability that we can based on the strike prices, kind of what we showed you with Target and with Darden, right? But then we also have to balance risk reward. I want to make sure that I don't have a 70% chance of winning, but I'm still going to lose money. It's a balance that we have to set, okay? Before you place that trade, though, you got to know what to do if the trade goes for you or against you. I don't want you sitting in a trade feeling frozen like a deer in the headlights because you don't know what to do. Our options paycheck system has rules to take profits at predefined levels. You can set these orders up in advance with your broker. If a trade goes against you, we have a simple adjustment strategy that brings in more income to minimize your loss. We also know exactly when to exit a losing trade. And with a lot of brokers, you can again set that order up ahead of time. So that way, if you're stopped out with a loss or profits, it just happens automatically. It becomes a very unemotional event. Now, lastly, you want a way to do this quickly. You don't want to be spending all day on the process. So you need a tool that allows you to do these things. It should be something you're comfortable using. Some brokers have some great tools that are way better than others. You might find some paid tools to be effective. For example, I use our proprietary tool from VectorVest called Options Pro, and it saves a lot of time for this. Now, earlier we talked about Mike and Jim, and each of them is getting the results in about 15 minutes a day, and so is Hugh. He told me one of his biggest struggles was finding a system that was efficient and worked. He said he sought that proper balance between trading and free time, and he didn't have a current proper work-life balance. Are you like that too? Do you spend too much time on things you don't want to do and then not enough time doing the things you want to? Now that Hugh has learned the options paycheck system of selling options, he said he has more confidence, more free time, and is able to have more fun. In his first 43 trades, he had 38 winners and returned over $26,000 in 4 months. So I want you to do this. Let's do an exercise. I want you to take your pen. I want you to put a little check next to the part of your system where you're good. So if you're already pretty good at picking stocks and market direction, put a check mark there. Okay? However, if there's an area where something isn't working or maybe you need a little work, put an X there. So for example, if you don't know how to manage repair an options trade correctly and maybe your losses are over your winners, put an X there. Don't overthink it. Take about 10 seconds and give yourself a check or an X for each one. Now, do me a favor. What areas do you need to work on? Type in the chat what areas you most need to work on. All right. All of them. 5, Ron. Matthew, you're at Stock Finder. All of them haven't looked at doing this in a while. That's great. Most all. Setting up the trade and trade management, Paresh. All right. So again, you've got an idea of where you need to be. Again, I'm just reading a few examples of them. Pramal picking the right stock. Kevin, most of them. Gene, 5 of them. Setup. Now, here's what I see with most investors. You get a couple of checks, but then you also got a couple X's. And the X's are where those mistakes happen. This is where people start guessing, and this is where results start getting consistent. So if you've got even one X on your list, here's the good news. It's not that you can't do this. It's that you don't have a complete step-by-step process you trust. And that's exactly what the options paycheck experience is built to solve. So listen, I can't know your exact reason for coming in today's webinar, but I'm going to make a few guesses. Maybe you felt like you're trading blind, you're bouncing from one idea to the next, you get a win, then you give it all back because there isn't a consistent process. Or maybe you've had inconsistent results. You make some money, but then giving it all back on your next trade. Or you've had loss after loss where even those small losses, they start adding up and it quietly drags on your confidence. Or maybe you're just doing okay, but you know where you're not where you need to be, and you want a clearer plan that you can actually repeat. Now, you saw today it's possible to win even if you're wrong. You can do it with very little risk, and it's even less risk than buying and selling stocks. You saw the system to get consistent income with options, and I showed you just a few of the many, many people who use the system every day, so they never have to worry about retirement again. You saw over and over the secret to generating consistent income is that shift from being the gambler to being the casino. Because listen, the casino doesn't need to win every single hand. They just need a process that stacks probabilities over time. And now hopefully you see the game a little bit differently too. And that's going to put you ahead of most investors because most people will keep doing what we talked about. They'll buy options the risky way. They'll guess. They'll manage their trades emotionally. And you can't stop that. And honestly, you don't need to. As long as there are people willing to take the other side of a bad bet, there will be the opportunity for investors like you who will do it the right way with structure. And that's what the options paycheck system is designed to do. Stack probability in your favor with a repeatable process. And as you saw from folks like Brian, Bruce, Bob, Jim, and Hugh, and John, it's not theory. People are using this kind of structured approach in real life. So the question should no longer be, can it work? It's, are you ready to make it work for you? So if you're like most people, you're wondering, well, how do I implement this system in my portfolio right now? Well, you have the choice. Option number 1 is you can choose to do absolutely nothing and stay exactly where you are right now. Option 2, you do it alone. You can try to piece it together through YouTube videos and internet articles and trial and error, and you may eventually get there, but it's slower and it tends to be more expensive through time and mistakes. Or let us guide you through it. I'll walk you through each piece of the options paycheck system, including live support and implementation help. And that's what the option paycheck experience in 2026 is. So the options paycheck experience is the most comprehensive program for generating consistent income using option spreads. It's an 8-week guided experience designed to take you from I understand the idea to I can place and manage these trades with confidence. Now we built it around a simple 3-step progression. Simplify, multiply, and then implement with support. And here's how this works. We're going to start by simplifying the entire system by teaching you the base trade on a single symbol, the SPX. This tracks the S&P 500. So you can place your first confident paycheck trade without feeling overwhelmed. The goal after the first 2 weeks is for options to no longer feel like a foreign language and for you to place your first SPX trade using a very simple weekly system. Then we're going to teach you how to multiply the base trade and apply the same clear rules to carefully selected stocks. This is going to give you more opportunities, but not more complexity. The goal after weeks 3 and 4 is that you'll understand the full paycheck process and feel ready to begin practicing it with the live trades. Then we're going to spend an entire month placing live trades together so you can implement the system on your own with confidence. You're going to get live trading sessions twice per week, and you're going to see the system applied step by step. The goal is for you to completely feel comfortable with the rules from start to finish and know exactly how to place your trades on your own. Now, all throughout the whole program, you've got support in our all new course room, along with the replays if you can't attend them live. Now, here's a recap of everything you get when you enroll. You're going to get the Options Paycheck Experience core training. This includes the modules, the 8 step-by-step modules, the assignments, the quizzes, the slides, and more. In addition, you're going to get the Mastery Package. These are 8 live sessions during weeks 1 through 4 where we help you simplify and multiply as we talked about just before. Plus, you get a private student email which gives direct access to our Options Paycheck team, and you're going to get access to our powerful VectorVest and Options Pro software. Now, additionally, you're going to get an implementation month where you get live trading sessions with me twice per week, and I'll walk you through the process step by step on real trades, and we're going to help you implement the system. And you're also going to get that SPX Fast Chart paycheck system, okay, which includes the training videos, the weekly recordings of my actual SPX trades each week. Now, also, for the very first time, we created a 24-hour-a-day, 7-day-a-week course room. This is where we do all of our training. You're going to be able to interact with the instructors and your fellow students. You're going to be able to ask questions, get peer support, and you're also going to get our step-by-step trading checklist. And most importantly, our trade tracking spreadsheet. The spreadsheet does the math for you. It tells you where to put your stop. It tells you if the trade meets the risk-reward criteria. It does everything. And you're going to get full replays if you can't attend the sessions live. This isn't just information. This is guided implementation. Now, again, this is for serious investors who want a rules-based approach and are willing to follow a process. It's not for gamblers. It's not for people looking for a get-rich-quick scheme. This is for serious people who take their investing seriously and who are willing to do the work to get the results. Here's what I hear from students again and again. Jake said, I learned more about trading options in this class than I have in 30 years reading and studying on my own. Perry said, it taught me the correct way to trade credit spreads, which I've never had anyone else teach me. Kevin said, I've made enough money to pay for the course in just a couple of trades. Now, you're also backed by our 100% money back guarantee. You can go through the entire course, and if you're not satisfied we taught you how to profit using options, just notify us within a week of finishing the course, and you can get all your money back. It's completely no risk. All we ask is that you give it your best effort. Come to the classes, watch the recordings, do the assignments, because we know if you do, you will see the results. If you don't do the work, you won't be eligible for a refund. And the reason we have such a tight refund policy is because we only want to attract those who are incredibly excited to jump in, do the work, and get the results. Now, the total value of the course and all the bonuses is over $5,000. So between now and February 3rd, we've discounted the course, and for those of you here live today, we have an additional discount. Since you've spent about an hour with me, here's what I want to do just for you. If you order before the end of the webinar today, instead of paying that $12.95, you can get it for $9.95. That means you're going to get the full course, 1 year of access to the course materials, the modules and everything. the mastery package, the implementation month, all for $9.95. That $9.95 price will only be for those who register before we finish up today. Once we finish, the price goes back up to $12.95. So if you're ready to order, just go to www.optionspaycheck.com, get yourself signed up. Now listen, I know $9.95 is an ask, but then ask yourself, how much is it going to cost you not to do this? How much money can you lose by learning by trial and error? And how much potential profit are you going to miss out on? How much time and energy are you going to spend trying to do this on your own? And then again, ask yourself, how would your life be different if you did it and it worked? Now, there's a saying that the best time to plant an oak tree is 20 years ago, so you can be sitting under it now enjoying the shade. Do you know when the second best time is? It's today. It's not too late to begin to prepare yourself for retirement and to learn to generate income. This is going to be one of those deciding days in your life. Is it going to be the day you decide to take action and set yourself up for a secure retirement? Or is it going to be the day you look back and say, oh, I squandered an amazing opportunity to create that consistent income stream? I hope you don't regret the decision you make. Don't miss this opportunity. I want to work with you and take you through the process to make you a proficient income trader. So again, go to www.optionspaycheck.com, get yourself registered. Remember, the $9.95 price is only available while we're live on the webinar. After the webinar is over, the price goes to $12.95. And then registration closes on February 3rd at 10 a.m. So go to optionspaycheck.com right now, fill out your details. And hey, if you know what's right for you and you're joining me, type a couple of words in the chat. Say, hey, Ron, I'm in. That way we know who's signing up and we know who to welcome. All right, let's do this. Let's officially start our Q&A.
Hey, Ron, Todd here. And Brian was having some computer trouble, so I'm stepping in. A couple of questions. Let's review first of all the course calendar when the course actually starts.
All right. Well, let's take a look at that.
People still peppering that question.
I happen to have a schedule of that. So as I just mentioned, the course starts February 3rd. Okay. In that February 3rd, 4:30 class, it's just a welcome. We want to make sure you know where everything is at so you know where to get all the materials from. Now, if you sign up right now, you're going to get access to all of the materials, the schedule or the slides, the cheat sheets, the quizzes. You're not going to get access to the software yet. That starts the first week of February with the live curriculum, but you're going to get everything turned on basically today. So before February 4th and 5th, I would ask you to watch the first two modules. Then we're going to get together on the 4th for module 1 to do a mastery. We're just going to walk you through what was in module 1. Make sure you don't have any questions and everything. On Thursday, we'll do module 2. Then you can see in February, we're going to go through the remaining content. So in week number 2, we're going to teach you that 35 Delta SPX trade. So it's something you can get started with and get trading right away. Then the third week, we're going to bring in stocks to the equation, and we're going to finish that out in the month of February. So for the most part, Tuesdays and Thursdays, 4:30 p.m. Eastern time. And again, we record all of this stuff. So if you can't make the live course, it's not a big deal. And remember, we've got the live course room. So you can go into the live course room anytime you want to and ask questions. I monitor that. Other students will monitor that. You guys can chat back and forth. Now in March, on Tuesdays and Fridays, we're going to have our implementations. So on Tuesday, our live trading is at 4:30. Now you may ask, Ron, how do you do live trading at 4:30? Well, I'm going to look for trades after the market closes and show you how to place them for the next day. That way, if you're still working full time and you can't do this during the day, I'll show you how to do it at night. Then on Friday at noon, we are going to do our live trading during the market opening. So Tuesdays and Fridays, we're going to have our live trading sessions in March.
All right, so that should help Paresh Milan. Those are the details for the coursework itself. The biggest change for this year that I'm kind of excited about is this dedicated coaching room. It's open 24/7, so that'll be a nice incremental improvement over what we've been doing now for several years. As Scott says, some of our clients are exceeding the 3% monthly return. How are they doing that?
Well, they trade more. Like we have clients, I trade about 10 to 15 trades per month typically. They might trade 30 or 40 trades per month. It really just goes to how much you want to actually put the trades on for. I'm a little bit more, I would say, conservative, so I don't trade as much. So it really just comes down to how much you want to trade.
Yep. And so that ramps us into closing comments here. If you guys have any questions that are still outstanding, do a little cut and paste for me and jam them in here at the end so that I can make sure that we get them addressed for you. All right, but other than that, Ron, I think, unless there's anything else that you can think of, maybe common questions, I think we're
Just
ready
in
to wrap up.
case, just in case you're wondering how to order, by the way, remember you go to optionspaycheck.com and all you got to do, if you click on the enroll now, just click on that button right there. And then all you got to do, enrollment is open. And just to kind of go down here towards the bottom, it actually kind of gives you the whole outline of the program. That way you know exactly how it's going to work. Okay. And if you go back to that main page, if you scroll down, it tells you that you've got 42 minutes to order for that $9.95 special. So if you click enroll now, and then you just click buy now and save, over to the right, you'll see it's $9.95. That's the special price. Just type in your email. Now, if you're already a client with ours at VectorVest, it might say it's a duplicate email or something. You'll just have to log in with your normal name and password, and that'll process for you. So that's pretty much all you got to do to sign up for the course. And as I said, once you sign up, within the next 24 hours, you're going to be given access to pretty much the entire course materials. You'll be able to go in there. You'll be able to kind of see the different things, and I can show it to you right now real quick if I can get to it. Give me a second. Bear with me just a second. You're going to be able to open up the options paycheck experience, and you're going to see all of the curriculum. So you can actually get started right off the bat. Okay, here's our live class schedule. So these are all the sessions we'll be doing live in the next week or so. These will all become active. You'll see the recorded lessons for all of the modules. You'll see the action items walkthrough, review questions, everything that you need. The SPX paycheck system, market direction, stock selection. So you'll see everything that you need. If you go to resources, this is where you're going to be able to download all of the materials. So all the slides that we use and everything, you will be able to do that as well. So again, you'll get access to that tonight. You'll get the software starting the first week of February. And by February 3rd, just make sure you watch modules 1 and 2 and you should be ready. But that's a quick rundown of, how we do it.
All right, a couple fast and furious that just came in here at the end. Let me just make sure they're covered. So Christian says, and there's a lot of information that we're presenting here. So
Yeah.
I get it that you might have missed it on the first pass. It's fine. So is there software that comes with the course? Yes. So all the software that we need certainly to teach the course is all included in the course. Some of that software is you have the choice to continue with it, but this is a standalone technique that we're teaching that doesn't even require VectorVest. So you'll learn how to do these trades whether you use our resources or not. Of course, we think our resources make it easier, faster, better, but that'll be for you to decide. But you certainly get all the tools you need to learn these trades. All right, Diane says, is there a reduced price for legacy subscribers? We call those legacy subscribers our elite subscribers. So yes, there's elite pricing here. Give us a call if you like. How are you guys related to VectorVest, says Abdul. Well, we are VectorVest. VectorVest signs my check. So that's how we're related. All right, and then finally, Bryce says, this video is being recorded. Is the recording available to watch again? Yes, so the replay will come through the GoToWebinar folks so that you can get a replay link from that. All right, so with that, Ron, I think we are covered. So I'll leave it to you.
All right, sounds good. So let's do this. Let's go ahead. We'll wrap it up tonight. And with that, I want to just say thank you for being with us tonight. I hope the hour was worthy to you. I hope I opened up your eyes to some new and a different approach to trading. And, I hope that you join us. We start these courses every quarter. We've got lots of people behind us. So I hope that, you make the choice, join us in February, and we're going to teach how to implement a trading system here in 2026. So with that, I will bid you a fine good evening and hope to see you in our next options paycheck experience. Thanks again, everybody, and have a great evening.